A very good morning. Welcome to Chartbusters. Well, the bears are feeling good this morning, but if you want to look at a couple of positives, one would be the fact that at least we've defended the 15,900 odd mark. Numerous times we've gone closer to that level, but it's been defended. And also the breadth of the market. The number of stocks that are advancing have moved up from around 120 to around 450 as we speak. So the breadth of the market, there are select pockets that are doing reasonably better, and that's why you have a little more stocks that are advancing. Hey, Mangala, morning.
Hi, Nigel. Good morning. It is the weekly options expiry, so the bulls would look at it as a success if we manage to close above that 16,000 mark. But until then, bears are definitely ruling the roost this morning. First up, all the top stories that we're tracking. Indian indices opened sharply lower after a bloodbath on Wall Street. Nifty slips below that 16,000 mark. All sectors trade with losses. Mid-caps fare worse.
ITC is only one of the top gainers on the benchmark after seeing a strong showing in the fourth quarter. The stock hits the highest we've seen in the last 3 years as earnings beat estimates on most parameters. The cigarette volumes, remember, grew by around 9%.
It's yet another dismal quarter for Lupin as earnings miss estimates on all fronts on the back of higher input costs and price erosion in the US market. Stock lower by 8%.
Manappuram too reports a weak set of numbers in the fourth quarter. The profits falling close to around 45%. The provisions rise as asset quality worsens. The stock corrects close to 10%.
And it's a weak quarter for Pidilite as well. Well, margins come in at 16% versus expectations of 20%. Consumer business volumes contract as opposed to expectations of a 3% growth. Welcome back, and now we have Granules. That's the stock on our radar today. After reporting its fourth quarter numbers, revenues grew on the back of higher paracetamol prices, whereas higher raw material prices impacted the company's margins in the fourth quarter, and as a result of which we're seeing a big dip of almost 5%. And this, remember, comes on the back of a 40% decline in the stock that we've seen from its 52-week high already. So let's welcome Mr. KVS Ram Rao, who's the joint MD and CEO of Granules, joining in. Thanks a lot, Mr. Ram Rao, for joining in. And the first question really is on margins, because, you know, at peak, your margins were close to around that 30%, average close to around 24-25%. This time around 18.7%. How bad is the price erosion in the US and the input cost scenario going forward? What can you look at in terms of margins?
Yeah, thank you very much. As all of us are aware that in the last couple of quarters, the margins have significantly gone down on account of very steep increase in the raw material prices. And some of the most important key raw materials that we procure, the prices have gone up compared to Q4 by more than 60%. Some of the solvents have gone up from 40% to almost close to 120%. At the same time, in the US, this has been a very different year as far as the pricing is concerned. The deflation of the prices in the US is much, much larger than the last couple of years. And these are the three major reasons why the margins are low. However, we have done very well in the last quarter as the margins have gone up, and that is because of good portfolio mix as well as a better management of internal efficiencies in the organization.
All right, Mr. Rao, fill us in with a couple of more details. Your paracetamol, I think, as a percentage of sales has moved to roughly around 40% approximately. Tell us, what is the utilization levels? I recall utilizations were lower because of availability of PAP, which is the key raw material. Have things improved in terms of availability of PAP? And also, what are the utilization levels of this segment? Go ahead.
Yeah. So the PAP levels utilization, as you see, from quarter to quarter, we are slightly better off, but I don't think the situation was not dramatically improved. We were anticipating at the end of quarter 3 that the supply levels will go up. But because of the situation in China, one of the biggest suppliers has just started the production. And we expect the PAP levels to improve probably from July onwards. So the situation remains the same. Our capacity utilizations have marginally improved on account of our effort with other suppliers.
So do you want to put a number to it? PAP, you're expecting it to improve by July. So even first quarter, you'll struggle in terms of availability. So what were the utilization levels, say, in quarter 4? Where do you see it in quarter 1? And, once the PAP availability improves from quarter 2 onwards, where is it headed? Go ahead.
Yeah. I think I don't want to put a number right now here, but the capacity levels remain the same as what they are, or marginally improved compared to last quarter.
Okay.
But we expect in Q2 to go up, not very significantly, but definitely a much better pack supplies, assuming that the things in China are going to improve and the logistics also going to improve. Today, we face a lot of problem on the logistics. You're also aware of it. So I think these are the two factors which will enable us to come back in the month of July and onwards with a better capacity management of harassed.
Okay. Right. Just go back on the US price deflation and your input inflation point, because you said that while the US price deflation has been the worst in the last many years, input inflation has not been supportive to your margins. Now with your utilization levels increasing and with some sort of stability in raw material prices, I'm sure you'll be able to do some better, right? Could you give us a sense of where margins are headed from here? Are you going to see further improvement, or would they go to lower levels before they improve?
Yeah, Mr. Rao, Mangalavan, we were trying to get a sense about the band that you can work with. We are aware that margins were at 25%. They've come down to around 18.5%, though they've improved in Q4 to Q3. So give us a band that we should work with. Please go ahead.
Yeah. So I also would love to give you a band, but the way the things are happening, I can say that the margins we are not expected to go down because we have not seen any significant shift in the pricing of the raw materials in the Q1. So I don't say they will truly go down to what levels, and the freight cost will go to what levels. I think this is very uncertain. So it's very difficult to predict a number. But qualitatively, I can say that the organization is working on several fronts to ensure that the margins to be maintained and improved in the coming quarters. Okay. So definitely there are several efforts in that direction. For example,
so we take that point. Qualitatively, you are taking steps to ensure that margins will improve. So this is something we will only monitor as you report your numbers in the next few quarters. But, R&D costs, they moved higher in FY22. They were close to around, 109 odd crores in the first 9 months of the year. Could you give us a sense of how much it was for the full year and how much it will be for FY23?
Yeah, I think the full year R&D costs, we are looking at an additional 33 or 34 crores. So R&D costs are closer to 140 plus crores in the year. And this is a shift that we have been consciously doing in the last couple of quarters in improving our portfolio mix. And it's going to be a little more in the next year because R&D, science and technology is going to be the biggest focus.
Can you define a little more, Mr. Ram Rao? Because last year was 64 crore. This year it's 140 crores. How much is little more?
I think we are expecting another 20-30 crores more on the R&D side.
So around 160 crores for the year is what R&D cost should be in FY23?
Tentatively around that.
A quick couple of other details. Europe as a percentage of sales, it's gone up from around 15% to around 21% odd. Will the contribution from Europe go higher from here?
I think that is one of our strategic initiatives that we have picked up in the last couple of quarters.
So where does it go?
Europe is going to be a very strategic region. And if you see our mix, consciously, if you see that while US is growing absolutely, but as a percentage, you see a 2 to 3% reduction in the US already. Yes. And this is what we would love to bring take Europe from whatever the percentage right now, I think it's 21% and it will likely to go up. And I don't want to put a number, but definitely we are consciously focused on building Europe and LATAM as two geographies for our future commercial expansion.
All right. What about, do you intend to get into CRAMS?
It's a plan, but I don't think we are ready to unfold our overall strategy.
So not in FY23?
May not be in the first couple of quarters.
And what about debt reduction? Anything that we could expect in this year, or debt will be more or less stable?
I think it should be more or less stable.
Got it. Thanks so much, Mr. Rao, for joining and filling us in with all those details. Look forward to chatting with you during the course of this year. Well, time to slip into a short break. As we do that, here's some great news coming in. According to the Global Digital Subscription Snapshot by FIPP, Money Control Pro's